Okay, so it is working. Okay. So this morning I wasn't able to stream, but I did. I was able to just take a couple of trades or place a couple of trades. One of them triggered. So just to resume last night's activities or yesterday's activities, we had to. I had to close the position early in order to stay within the rules of this new prop firm, which was around here. What did that give me? That gave me maybe $70, like maybe two-thirds of the profit that I'm used to. And unsurprisingly, I was not surprised by this. It retraced all the way back up, and if I had moved my stop for a break even, well, let me back up a sec. If I had held a position because I was allowed to, and also moved my stop up to break even, I would have gotten hit with that. It went all the way back up to the 34.75 area, and like textbook, it hit this beautifully formed um, doji candle on the hourly, followed by a bearish engulfing formation, supply zone, whatever you want to call it. There's many names to indicate how beautiful of an area this is to take a trade, to place a limit order, set and forget trade, and textbook situation. It rose up right into that zone and then dropped down today. I was early to this. I kind of preempted this by looking at the momentum and everything. So I was in right here. I wish this broker would, or Tradeovate would, allow the historical ins and outs and indicators to show on the candles. It would be helpful, but it only shows it for like the day, and then like it forces you to log out, and then the next day it goes away. Um, so right now I am looking for it to hit target. Um, I am slightly concerned about the um, the zone here. This area, very strong buying volume, and like a lot of buy orders here. Strong area of imbalance. But at the same time, looking left, a lot of this area was gobbled up, right? It wasn't just a. I mean, it might look different on the 4 hour, right? On the 4 hour, it looks less intense. On the 4 hour, it looks like it's just a. Let's see, how would you quantify this? Rally base rally right there, with another rally base rally behind it. So like two zones back to back, which isn't the worst area, and the momentum is above 60. So on the larger time frame, you can argue that this zone could hold up. um, so I'm slightly worried. It makes me want to maybe consider taking profits early, but that would go against my trading rules, so I am not going to do that. Instead, what I am going to look at is we have another textbook zone right here, taking this doji candle right there. I'll use a different color. This candle right here is looks pretty good. Looks pretty good. Um, I would want to see momentum break down into below 40, into the sub 40 area, hit my take profit, and then I'd be interested in taking this area, because that is, well, and also price breaking making new lows beyond the seven, beyond, well, anywhere in this area, because there's a couple of wiki candles here that it can, if you break below this, does it count? If you break below this, does it count? If you break below this one, does it count? I don't know. That's where technical analysis becomes somewhat subjective. If you're going to be super conservative, you're going to take the lowest of the lows, For me, I'm just going to take the quarter range. Any kind of break into the 8 to 25, 750 area to me is valid. Anything below the 750, and I'm going to be like, that is to me a trend reversal, legit. Especially with the momentum going below 40. If it just kind of hovers around and chops around and wicks around this area with a gain in momentum, I would not take this trade. So it really is a combination of what gets printed on the price action and the RSI. For now, though, I need these types of wins to hit the full position, because the two wins that I've had so far have been cut short, not because I wanted to, but because of the nature of the rules of this prop firm. So that really starts bringing into question, like, do I need to make an adjustment in strategy? Because my strategy is made more, is conducive more to swing trading than it is day trading. Quarters can still work in day trading, but I would have to, find a new system of rules and edge that would work. One such edge would be to stick with the Dow. I did consider looking at, the S&P or the NASDAQ, where they don't move nearly as many points. I'd have to start looking at like the right side of the decimal point, which starts to change the mechanics of it a little bit. Same with the S&P and the Russell. The Dow is the only one where it's a giant number. It's the oldest index of these four major, of the big four, and therefore it has gone up the most over history, and it's the biggest number. That in and of itself provides an advantage for this particular quarter's trading strategy, in my opinion. I mean, I haven't been trading for like long enough and testing it against back testing this strategy against all the indices historically to really fully make that claim. I'm just connecting dots here. It's just common sense. If you're trading, if you're aiming for 250 points, then quickly, then the index that has the fastest amount of movement measured in points, not in percentages. The percentages are all kind of within the same range of each other, but the points is very different. Then obviously the largest number of points per day is going to be most conducive to a quarter strategy where you're just trying to scoop up points. That's why I trade the Dow. There are some disadvantages, especially this year. Fundamentally, the Dow has been the most choppy, and the S&P and NASDAQ especially have been the most trendy. So, a trend is your friend always. And so in that sense, even though the NASDAQ moves slower and I'd have to adjust my strategy for that, it would have been, hindsight being 2020, it would have been the more fundamentally safer and stable index to equity market to trade. Anyway, so I'm looking at potentially not trying to get 250, where my risk is 75 and my reward is 250, because I'm finding and I'm just recalling back in previous trades, they don't all take place within the same day. They don't all complete their quarter movement within the same session, I should say. It's all about the session, not the same day, because the sessions the sessions span 2 days, from 6 p.m. Eastern to 5 p.m. Eastern the following day. That makes me start thinking, okay, maybe I can trade smaller movements, but with the same kind of 3-to-1 risk reward ratio, or reward risk ratio, 3-to-1, and maybe I can scoop up points by going smaller stops like 25 ticks and looking for 75 tick take profits. Maybe. It's something that I'm considering, especially with how this challenge has gone so far. Not sure. It would have been beautiful. Like an example of that would have been. I would have to look at the much smaller time frame too. I would no longer really be looking at the 1 hour. I'd be looking at like instead of looking at 15 minutes, 1 hour and 4 hour for my like my 3 layers of time frames. I would probably jump down to the 5 minute, 30 minute, and then maybe 4 hour, or maybe 5 minute, 30 minute, 1 hour. I don't know. I'm not really sure how that would really work, but definitely jump down to 5 minute and 30 minutes. So if I do that, and this is really just me kind of thinking out loud at this point. I don't need this watch list anymore. So this is just me verbalizing potentially a new strategy. I don't need this either. Hide. This is just me verbalizing new strategies at this point. At the 5 minute level, the RSI is less reliable. And there's a lot more fake outs. So for example, in this case, we have a divergence over here. We have positive divergence or bullish divergence, indicating that this right here could be well, this really already is on the 5 minute level. This already is a reversal pattern. We have divergence. We have a kind of an uncertainty candle and a hammer candle, right? So if I were to do 10 minutes right here, this would be okay. It doesn't look quite as good, but these two candles followed by this candle's not done printing yet, but if it becomes a bullish engulfing, then and this is in an area of demand right here. It touched this demand zone. This is a long right now on the 5 minute. And it's a long that I would take from probably like the 850, right? Instead of going 250 points, I'm looking at more 25-point increments instead of 250-point increments. So I'm looking for 850. My stop would be 825, and my take profit would be either a 3-1 or a 4-1. So either 75 pips or 75 ticks or 100 ticks. So it would go from 850 either to the 925, which is a major quarter area. This is why I want to be mindful of that. And then if I want to squeeze another 25 out of it, then it would just be an even 950, because that's where the start of the bigger zone, the hourly zone, starts. So that's an example of what I would take. Now I kind of want to do that. But the other disadvantage of this prop firm is that I can't be in longs and shorts at the same time. It doesn't allow that hedge. I don't know of any futures broker that allows that anyway. And this is the Tradeovate broker at the end of the day. Like, this is a Tradeovate account. So I don't know whether it's something that I'd have to experiment with, and it's better to experiment with that. Actually, you know what? The way to experiment with it would be to just apply default. So red and green will be my test situations, and just do it. This is my forward test without actually taking the trade. Let's see here. I would risk 0.04. This would be the 850. Come on. This is a 25, and then I would say, in this case, 75. Just a 3-1. What the hell? Oh, I reversed it. Sorry. Okay. So this is a position that I would want to take, but I wouldn't take it here. Visibility. Style, no labels. Oh, I can't get rid of the other labels. To me, this is okay. Okay, whatever. I can't. Okay, so let me zoom in. My indication, my trigger to actually place the order would come right after this candle because it was a bullish. Stop it. Right after this candle because it was so like literally right now. So I'm going to place it, line it up right with this candle because after this candle prints, I would be interested in placing the long. Now the aggressive move would be to just take it market order at right now, the 870, 875. And then just take it. However, I don't trade like that. That is valid. I just personally don't do it. It just conflicts with other areas of my trading rules a little bit too much. So I would wait for the retracement. I do limit orders, although that might change like with the nature. Like the other thing about this strategy is that this adjustment is that it requires me to look at the charts way more often, which isn't something that I want. I like trading, I like swing trading because it allows me the luxury of not having to look at the charts as often. A lot of people are going to say, well, it's riskier because you inherently are holding positions for longer periods of time, and that is risky. I understand that sentiment, but I mitigate that risk by trading bigger. It's risky if you're scalping, but it's not that risky if you're trading as big as I trade. And you're looking for 250 point moves or tick moves in the Dow, for example. So that's one thing I already going into this adjustment I don't really like about it that much. It is something that is potentially a conflict of schedule, like a scheduling conflict and availability conflict, where I'm just going to miss a ton of opportunities if I end up actually executing this way. Anyway, I think so in this scenario, I'm going to leave this on. We'll see if it works out. And the positions that I put on, I'm going to put it on really small. So I'm going to leave these types of, the default is my theoretical, and then the purple and gold is going to be the ones that I'm actually planning on taking on, the ones that I actually plan on leaving there. So right now, just to be consistent with it, this might get a little bit too colorful, but this I am leaving on. When did I place it? Like right around here, around the same time. And this order I took over again, and I got entered in right here. Oh no, I shouldn't do this because this is going to make me think that I'm in the order. So I'm just going to have to continuously move these things to the right so that it doesn't look like I got triggered into it. Right? Hold on. Why does it do this? I don't want that. I'm going to have to get rid of that shortcut. I'll stagger it a little bit. Okay, so this little dotted line indicates that I'm currently in the position. I am in profit. I'm going to leave it alone. I need these bigger wins and not necessarily just taking these 2-to-1s. I need it to be over a 3-to-1 at least some of the time when I have breathing room. If this just chops around, I mean, we could see it's 12:47 Eastern right now. We could see a midday reversal, and this could just rise back up, and because of the divergence that I just got done talking about on the 5 minute, it could rise back up and stop me out. It's entirely possible, and then I will regret my decision. But not that much, because that's the trading system, that's the trading rules, and it'll suck, but it'll be consistent with the rules. Because at the same time, this 5 minute RSI could easily be a fake out. That's the other thing. Like I don't know that I could handle as many fake outs as there will be on the 5 minute. Look, zooming out to the 30 minute just to wrap up the conversation. I do see here. So this to me is another reason for continuation to the upside. Is we have technically a lower low in the momentum that didn't bring price to a lower low, aka hidden bullish divergence, which is a sign that this could be continuation. So I've already looked on from like the big trade, the major quarter trades, to consider taking the 825 or the 750. But I want, because I'm in this position already, I'm not going to put on a new one. It would just be, I did have an alert here. I'll set an alert to be right around. I'll set an alert near the entry point here. Yeah. And so when that gets triggered, I know I'm right on the cusp of a take profit, but it gives me just enough time to consider looking, based on what happens, looking at potentially a long to take advantage of this hidden bullish divergence, which is something that I'm personally proud of noticing, because that was something that has always been escaping me for a long time. And they're not as common and maybe not as strong as a regular divergence, but equally as valid. So that's it for today. Potentially an adjustment in methodology and strategy, but hopefully not too big of